Hey guys, DJ from PTA. I'm going over two stocks, Apld and Sidu. Sidu being a former runner. No trades for me to get day. Been pretty much a slow week for me. Been completely off the desk. Kind of not necessarily taking a break, but just taking care of things and just getting things situated in the property that I'm in. So that's been taking up a lot of my time and just haven't had time to really focus in on trading like I like to. So I kind of just been chilling this week and really just getting things situated with the house. I hope to be wrapped up and finished next this end of the week. So I'm looking at hopefully Monday we start to have some time to really focus in on the 25th or so. But we'll see. I just try to play it by ear. If I can't be completely in tune to what the market is doing or that market day, then I just don't trade. It's better to sit on the sidelines than to give the market your money because you're not focused. So going over the SPY, today was a pretty good day for the SPY. It actually traded and closed above that trend line that I was talking about. But like I always tell people, that's just one part of the equation. This still, in my opinion, doesn't signify that we're in an uptrend. Now, things have been going well, different stocks that have been rallying, but just like it did right here in this area, it opened above this area and closed below. So I'm not confident that this is just over just because we got a little bit of a peak. And don't get me wrong, if we circle this into, let's go down to the 5 minute for the day, you can see that it clearly closed over it and pretty much above it and kept on going in after hours as well. But again, I'm one of those people, I gotta see everything line up before I place trades. You just don't jump in because it broke a trend line or broke a specific area. It needs to confirm at this point. So yes, we do have a break. I like to come back up here, come back, confirm that it's going to go, and then look for a trade north, maybe somewhere here, 396, 400s up to back 417, or even back up to this trend line would be awesome as 12 as well, and this trend line being 436. So first stock, Apld. Now Apld has some critical areas that we were looking at. One of those being this right here. Now, why is this critical? I mean, look at the area. So when I take a look at area, I look at where it's bouncing from. So right here at this 168, we'll just call it 170. We see that the stock slammed and gathered up right here, and then some buyers took back over here and ran it from 170s up to the 5s. Now this happened over a course of a couple weeks, but it was still a nice move. Right here, you had a bit of resistance. Now, why is that important? Well, 397, let's just make that $4. So why is that important? We see we got a big wick, and then we finally broke through and moved from 4 to 5. We pulled back, we rejected it, and broke from here down. So that's a very critical area in itself because of that. I always look at the tops. So right here, as you see, this rejected and moved this way, rejected and moved down. So that 215 is a critical area as well. So I look over here, this might be an area here where you reject, and then it pretty much did like what I would call a gap fill at that area there. So this being, we'll just make that 125. And this was a key area where it broke down from. All right, so let's break this down into, let's go to a 30 minute first. So we had some action coming after hours the day before on the 18th. Then we had us a nice little pull down, nice piece of volume coming in and pre-market. We set our high in pre-market there, and then we dropped down, went back to the area, and then it pulled down. So right here was your first entry. Now you could have played it down here, but you would have to really been looking at it pre-market and everything. Honestly, I try to put things into perspective of like timing. So a lot of people would say, well, I would have saw it here, or this would have been a good area, or whatever the case may be. Yeah, possibly, but realistically, no. It's not a situation where you're gonna always just be there. You get what I'm saying? So a lot of times, you have to give yourself some breathing room and let that stock kind of move to where it's gonna move. You know what I'm saying? So the news. This was a news play. So ultimately, this was the article, and the key elements of the article was, Applied blockchain more than doubled 213 on Tuesday after the company signed its largest hosting deal ever with Bitcoin and Marathon Digital. Now, if you guys trade, you guys will remember Mara, M-A-R-A. So that was a trigger word. So it's a trigger word because people know Mara that plays stocks. So when people saw this may have been a sympathy play for our actual stock that traded. So it was part of the reason why it was moving. Now this news came out, again, 4:50 after hours, but the news to tell you about the actual largest hosting deal came out earlier that day. So that's where you had this move going on here. Now, breaking this down, let's go down to 15. You had your nice little move up, a pullback, and then it went back up. Now, the reason why I probably wouldn't have played it there is because of just a natural movement. The stock hadn't really swung higher than the previous swing low to confirm. So you like the stock to kind of swing high, swing low, and then knock out that previous high. So right here is where it actually knocked out the previous high. And then from there, it actually broke down. So that's the reason why I wouldn't have took that trade on that smaller time frame on the 15-minute, because it hadn't fully swung out and found some key areas. Now, when I'm looking at this, you see that, this became an area here, and this was entry day. So it was painted purple. And then the risk is 130. Then you figure it swung down here, and this is where it got kind of interesting right there. So not only did you see it boom boom, it's actually like creating support. The support came in right there, right around the 148, 150 area. We're gonna call that 150, and again put that as an entry day. So somewhere around there. I might even go a little bit lower. I'll probably say 145, just so I can get majority of the candles in there. You see it rejected it there, rejected it, held there, kind of broke down from there. This is the same little area that it broke down to, the 130s. So you figure your entry was probably somewhere right here. So let's go down to the 1 minute, or 5 minute I should say, first. And then you can pinpoint it from that area. So if we can go back, you can see that it went sideways, built up, dropped, and then pulled right back up into the move. Okay, so that was area 1. Area 2 was here. See that it bounced, and then it started to create support right there. So we put that as 160, and then it's purple. So you see that it kind of used the same area to break down from to the previous support. Support became new resistance. New resistance became new support here, and then that's when we got our nice little curl back up. So this was a little bit tricky. The reason being is just because you had a lot of price action, a lot of sideways price action for that matter. Probably because a lot of people were looking at it. So let me look at the numbers real quick. APLD. Yeah, so this had a pretty large float at 94 million. It traded 131, so it was a little over 1 times its float. That float has probably played a big factor into the move not happening until after hours. So once it did exactly into the 215 before the day ended, that last 5 minutes, it slammed straight into the price. Right there at 215 is being high and then pulled back. That 215 being a daily support resistance area, good area to look at. So a lot of people probably played it, wait till it hit this area, and then let it pull back. And then it eventually went to 264. So it was a solid trade. You had to definitely wait for it to get set up and be perfect. This probably would have been the ideal area, but most probably got in here after it did this massive curl up. Because this right here was just too parabolic and too short of a time frame. Again, you really didn't get over the previous swing low. So like I got over the previous swing low here with this swing high here and swing higher here. It held that previous swing high right there. So when it swung out, held the previous swing high and used it as support, then you usually get a massive run the opposite direction. So it was, pretty solid trade for those who were patient and was able to wait for it. The next stock, let's see, would probably be SIDU. Now SIDU is a previous runner. So you may, I don't have my lines on there, but for most previous runners, we usually keep our lines. So I'm looking at this, and this created a new area. Because that created a new area, this was one of your key areas. Remember, you rejected and pulled down. I'm going to make that 365. Just so we can fit a little bit more in there. It's acted as support here. After there's resistance, and then the breakdown. So I can look at this area here. This 305 is critical because it broke up to this, pulled down after that support, and then it created as resistance. So it's probably my 2 key areas was there, and then probably there as well. We'll make that 430. So that being said, this is all your areas. Okay, 430. Why? Well, this is where it rejected, and then it rejected here, and here. So this would probably be the next key area, 430. To see the stock go either way. There's a lot of people in this stock at that point too. Circling it out to the 30-minute, you begin to see this massive rally going up. This up. So this was more of a continuation. You had to be patient. Just wait till the smaller time frame set up properly, so you were able to actually take advantage of that particular play. So pre-market went up, rallied, and then you had this massive pullback. Now, when you look at this, let's see something here. On the 30-minute, it just looks like this. You see this massive pullback, but you don't really see it until you start zeroing in on the smaller time frames. So this was acting as support right here at 325 entry day. So, when you look at it and you find some major support resistance in a particular area, I'm actually going to circle that down to 320. Might be able to get a little bit more. Yeah, 320 basically. So you see that it pulled down to that 320 bounce and then confirmed it wants to go the other way. And it wasn't until really right here when it started to create this illusion that it was going to drop and then it ripped higher was really where everybody else got in at. Now, circling out, I like to see some type of momentum in one direction. You had a massive whip, and then you got some continuation there. So I like to look at the wicks. I like to look at the areas and know, okay, these are my areas. So when this stock had failed and created this is what I call a very steep one. So I'm looking for a pullback off of a steep slope like that. So most of my slopes when I'm trading stocks, I typically look at the slope of the stock. It's one of my secrets. So if I see a really deep slope, I know there might be a bounce. Or if I see more of a slant, then I know it's probably going to go like this and be aggressive. I very rarely see it go slant, pop up, pop down, and do this. Very rare. You're usually going to get that, or you get something like this, because it wasn't going that way anyway. So probability becomes a little bit higher with that type of mindset on it. So once it broke this area, now you can start defining what your actual risk tolerance and areas are. So in that instance, you got a massive support bounce. Now getting in early, not recommended unless you're a very well dressed trader. We had a bounce and a pull down into this support. So what you're looking for at that point in time is a pattern. So remember that we had a massive pull down into this area, which created B. The stock has to leave that area and then confirm. When a stock leaves the area and confirm, you can consider that to be C. So we got our double support, and then you end up finding some type of trade. I usually would say somewhere here, risk into C. So you got your A, B, you got your pull away and pull back to make C. So 340, 341 entry risk to 330s, 10 cent risk. And it went to 435 with a continual hold. So if you risk in 10 cents and it never returns back to your risk, you almost got a dollar move with really no headache. And realistically, you probably could have gotten in at 340 and took the 10 cent risk and then got 40 cent one way. Just that way there before we got to the drop would have been 69 cent, almost 70 cent with a 10 cent risk. 7 to 1, that's an excellent trade. So it's not about necessarily getting $2, $4, $5, the right amount of size and risk tolerance and, in a small range. And that's unfortunately right now in the way the market is, we're just not getting a lot of stuff in this world to move to $4 or $5 in that particular matter. So it's something to think about when it comes down to, okay, I want to get in this trade. Well, does it have the range that you're looking for? Are you okay with only making 50 cent when you only risked at 5 or 10 cent? So these good 3-to-1, 4-to-1, 5-to-1 trades is what gonna actually add some value to your account and build you up over time, build your confidence, and build all those other pieces up as well. So guys, if you have any questions, concerns, leave them in the comment section. Hit that subscription button, hit the like button, make sure you hit the notification bells just so you don't miss any of our videos. And guys, as I tell all traders, old and new, stay steady and stay focused.